This is eSec Money and Insights. Let's get over to our episode. It's Friday.
Oh, God. This is going to be the longest 20 minutes of my life. She's in a good mood. We don't need this. Would you get a new vest, too? Did you wrangle Chesham for that day?
No, I got this. I have an S&P Global vest on, everyone. I also have an S&P Global mug, coffee mug.
My goodness. We need a sponsor. How come we don't have sponsors yet? You were on that.
I was, but I was only going to do it for the laughter effect of it all. And then that became difficult, so I gave up.
I thought you were going to make Craig do spots.
I did. He was ready to do it, but it was a typical eSec gym problem where I had things scheduled and then it didn't work for you. But the third reschedule, Craig was like, yeah, I'm not doing this. I literally sat on a Zoom one time waiting for you to join with him so that he could surprise you with his sponsored advertise. I even wrote him a script that he was going to read.
You realize this is encouraging me to miss more podcasts and bump more times.
All right.
Makes me laugh.
We're here. We've all gathered here today together. Jim, how are you doing?
I'm great. Thank you.
Are you happy it's Friday?
I am. Yeah.
All right. Okay.
Been a busy week.
Plans for the weekend?
It's Mother's Day. Going to go see my mom.
Oh, yes.
On Sunday. Just in the States, I was told today. They must have a different day in London.
They've already had it. It was last month or something. I don't know why that Hallmark calendar doesn't align globally, but it doesn't. All right. McNeil, Mike Brooks, how are you both?
We're good. Shane Gillis is in town tonight, so I know some desk folks going to that.
Ah, nice. He's funny.
I was going to say, is that a comedian?
Oh, come on. You know who that is.
Really? No, I don't. Help me.
I thought you were more with it than this.
Sometimes I am, and sometimes I'm super not.
Yeah. He's the big deal. He's hosted SNL.
Ah, okay.
Yeah.
He also has his own show.
He got kicked off SNL.
Yeah. He kicked off SNL. He has his own podcast. It's probably a different vertical than this one, though. So I don't know if you compete directly with him.
He's not part of the conference circuit, so you might not have run into him.
Ooh, touche. I like that.
Nice, Brooksy. You can come back anytime.
Yeah. Talk to me, guys. What's going on? Who wants to kick it off?
Yeah, just a market update from these guys would be good. I know there's an awful lot going on both your desks, right? It's been a busy time in the market. We've been on the road quite a bit, been in New York a bunch. So why don't we start with Brooksy?
Yeah, I can kick us off. It's been active and volatile from a headline news perspective, obviously still centered around tensions in the Middle East. Some weeks are more optimistic of a peace deal. Some get a little more pessimistic and feels like a couple steps forward, a couple steps back. So it's impacted the forward expectations of rates as well as the Treasury curve in general. To eliminate some of that noise, the last month has been pretty anticlimactic in Treasury funding markets. There's a lot of seasonal factors, some technical factors, and still a flight to quality trade, which is seeing money funds inflows, hence more money in repo that has had our Treasury lending markets kind of biased to the downside. We've been seeing pretty favorable levels. We've been looking at SOFR versus OBFR. That is now inverted. For most of last year traded. There was a basis above that OBFR number when benchmarking trades to SOFR, which obviously correlates to the repo market. So we've been able to increase cash utilizations, both overnight term structures. We've been seeing pretty good demand from borrowers, keeping balances over statement dates and reporting dates. We went for a CAD month end last week. Maybe a little bit of volatility there. A couple of banks needed to pare down some sheet, but we're looking for the collateral back the next day. So I take that all as fairly favorable and fairly positive and bullish going forward. At the height of some of the geopolitical stuff, we started seeing asset spreads widen out a little bit. We were able to get favorable cash in, the cost of funds being low, but also some opportunities to invest it further down the curve, both in unsecured and secured funding markets. We are seeing that reverse a little bit and normalize back to January, February, beginning of March type levels. I think just as improving conditions, both from headline news and labor data continues to come in good. We got some employment numbers today that shows outside of all of the noise that the economy is still humming along. So I think that bodes pretty well for the overall health of the economy and optimism as a whole. I do think the reinvest part of the book has become a little more challenging the last couple of weeks, but I still think there's some decent value out there. I think secured funding continues to pile up for whatever reason, one way or the other, the equity market keeps humming along and hitting fresh record highs. So as long as that keeps happening, the need to finance those loans are going to continue. I do think upgrade, downgrade trades and tri-party funding in the equity space is going to continue to be top of mind. So we continue to try to get clients who are flexible from a schedule perspective in those trades. And I think there's some good value there. And I think we're going to continue to position the book in that way.
Brooksy, would you say cash yields and the cash portion, the reinvest piece of the revenue pie for our clients, is it coming in where you thought it would be 4 months into the year, or what's the state of play with cash reinvest and where it is relative to where we thought it would be?
All in all, I think probably better. Even from a budgeting standpoint, we are outpacing where we forecasted. Part of that is the first quarter of the year tends to be the tightest from a credit spread perspective. That was the case for the first 2 months of the year. We were at multi-year tights across most credits. And then what happens in March and April, that's been the case for the last couple of years, whether Liberation Day, Russia, Ukraine, even COVID, looking back 6 years, all kind of happened in that same time frame. The regional banking crisis happened late March, early April to May. We needed some macro events, I guess black swan, for lack of a better word, event to start widen out levels. This Middle East one, it was different in the sense where it wasn't a quick knee-jerk kind of trigger event that eventually came back to life in a matter of a couple of weeks. This has now been a prolonged multi-month event. So we've had sustained levels that have been a little higher. As I said, it's coming back down a little bit now. Our spreads the first 4 months of the year, if you probably look at benchmarking to reinvest portfolios, we're definitely up a little higher than where we've been at this point in years past. You couple that with the friendlier funding environment, so lending the assets to raise the cash being a little cheaper, obviously bodes pretty well from a spread product dynamic, right?
Yep. Yeah. Good. Thanks.
Yeah, and the only other thing I'd add that we're keeping an eye on is obviously we're in May now. It caught up quickly. In a couple of weeks, we could be going through a new Fed chair. We got through an important step either last week or 2 weeks ago in the Senate committee, and now final confirmation will be on the 11th, I think. Powell's going to stay on as a governor, so that kind of hawkish tone will be there in an oversight capacity. So it'll be interesting to see what the data gives the new Fed chair. His first meeting will be in June. Expectation is still curve's going to be flat this year. We're not going to move anything lower, but we do know he has a dovish tone to him. So it'll be interesting to see what the market starts to price and what the narrative and the rhetoric is around that.
When's the new chair?
May 11th, I think, is when he's to get confirmed. I think that goes in May 15th. So we're talking next week.
Yeah, wow. That did come up quick.
It happened fast.
This whole year has happened fast. So your summary then for those that are in cash-driven programs seeking utilization is the revenues at the beginning of the year were higher than maybe typical or the recent history, and that has come in a little bit in the last couple of weeks. Is sort of big picture what your summary would be?
Yep, I'll agree with that. And for that tightening the last couple of weeks, maybe wouldn't be seen for clients that can utilize more flexible schedules that have repo components to it. So we've done some reallocation out of unsecured product and into some secured funding, which those levels have held in nicely or have even increased. The funding needs for the counterparts are increased. So they maybe have a little bit more bid back ability to get done in decent size. So for clients that have the whole suite of levers, you probably wouldn't see that much of a tightening this week compared to 2 weeks ago. But if you're just playing in the unsecured space, you might be a couple of bips lower in the last 3 weeks.
Great. Thanks, Mike.
Mike and I worked together on a couple structured trades the past week or so, as recently as just before this podcast. So we're definitely seeing the grind higher of cash markets bleed into what people are looking to put on from a funding perspective. And it seems like there's no shortage of loans or funding if you can pair them up on these wrappers right now. That can be dependent upon the time of year. Q4, obviously, everyone's looking for outright funding. That doesn't mean you can't get some cash in the door to then spend in secured funding. But right now, it seems like there's a really healthy backdrop from a demand perspective. It's being pretty widely reported that gross leverage is at 95th to 99 percentiles on a 5-year time frame. Macro hedges were at a 5-year high in late March, and I think they're back to pre-conflict levels, but still elevated versus a 3-year time frame. But if you're lending main index equities, I think there's sufficient demand if you're trying to pair it up with some of the secured products. The intrinsic side is still a little sleepy. We'll definitely see it pick up the second half of this month and then in June. The rest will rebalance on the horizon. Some IPOs. There have been a couple bright spots, though. Infosys has been a really good trade. Stocks at basically a 52-week low. This is a company with a market cap of 50 billion. It's a widely held DTC ADR by a lot of institutions, a lot of participation, stock trading around a 20 fee or so. Definitely a trade that's been really healthy and with record date about a month away. One that we could see hang in there for a bit. It's provided a ton of value to beneficial owners from a lending perspective since Labor Day. Then the other one, billion to one lockup was this week. So it's coming to an end here. That's one that really traded sharply more special into lockup. Had a nice month or so, or 6 weeks of run there. Another one that we saw held by some institutions, despite being an IPO, that I think is a sign of good things to come as we head into what's expected to be a busier IPO season.
Didn't Ryan mention the IPO calendar being pretty hefty, huh?
Yeah.
Just in general.
But you can look at that a couple ways. A bunch of companies coming to market, but then we kind of like measure the actual notional size of IPOs. It's expected to be record setting. So it should be a nice opportunity for us heading probably into Q4 in the next 6 months or so.
So it feels like travel's the one constant in our world right now. Been all over the place in terms of meetings with counterparts and things. Outside of some of the commentary you just provided, are there any other interesting trend lines that you think are worth diving into in terms of market activity or expectation of things to come outside of IPO activity? And obviously we covered that the last podcast as well in a lot of detail, but what else are themes that you spend time regularly discussing with counterparts?
Jim, you're just in New York, right? You want to kick us off?
I was in New York. One of the topics I talked quite a bit about with our counterparts was this cash and how cash is going to look in 6 months or a year and what the changes to 15C3 really mean for the market. I think we summed it up. It will be impactful, but only to the tune of upwards of 20% of the book across the street. So I was happy to hear that, especially given Mike indicating that we're probably a little bit better than anticipated in terms of yield on the reinvest books at the moment. Obviously softening, but a unit of securities on loan versus cash is worth significantly more than a unit of non-cash at the moment, and it looks like it's going to stay. So I was happy to hear that our clients wouldn't have to find other sources, as we talk about many times on this podcast and internally, Brooke. Our client base is a net taker of cash these days for reasons other than just buying CP and repo.
Don't you also think our client is a net taker of incremental trades? And so they are better positioned than many to also do equity collateral trades. My hope is for a lot of our clients is that we maintain cash volumes at the level that they're at, plus or minus what we would expect and want, but maybe see some incremental upside on additional flow through, at least in the nearer term, as the rest of the market and lenders evaluate and adopt and seek approvals and changes and implementation to onboard equity collateral schedules if they're not already there.
Yeah.
Is that a hope and a dream, or?
No. We're already there. We have a huge equity for equity book.
No,
it's
I
just
know
not
we
with
do,
these
but I
U.S.
just-
brokers. So
Do you see that as just more incremental potential?
Yeah, I hope so. The rule change doesn't increase the amount of shorts in the market. And we're talking about U.S. brokers, so it's required to have a short against the borrow. If it's a zero-sum game, we will see cash go down and E3 go up. Our clients definitely want incremental revenue.
And I know not in all instances this would be the case, but more of a redirecting of where trades are going. And because I do think in the US that the lender is able to accept inequity collateral, it is just more limited. And so I think that for those borrowers that do want to reposition part of their book to equity collateral, they're not going to have as deep of a universe of supply to trade that against. And so,
Yep. Yeah. Like you meaning 40 Acts have to go and get their own approval from the SEC.
Correct.
Yeah.
And there's even a lot of non-40 Act lenders that aren't yet taking equities as collateral. So it's not to say that the landscape won't change in the next couple of years, and maybe that feels a lot different a year or two from now, but no one's flipping a switch on this, by the way. I think this is going to take a little bit of time on the broker side to prepare for providing equities, both in terms of their systems, their infrastructure, how they go about determining what's the most efficient collateral to pledge, things like that. There's a fair amount of work involved. And so not everyone will be shifting to equities inside of a couple of months. It could take the better part of this year for many, I think. Did I just freeze, or is Jim giving me basically like, I don't either like what you said, I don't agree with
I
what
was
you
not
said,
going to break. I just wanted to
or
test
I
silence.
just want to
That's all.
make it super awkward.
Nope.
Yeah.
Awkward. I like awkward. You taught me that.
All right. Yep. Lean into the awkward, friends. What else? We have a bunch of auctions upcoming and have had a few recently. Any highlights there?
Yeah, Asia seems to be very healthy in terms of spreads and desire to own portfolios in an exclusive. Korea, for instance, is back on the radar for many now that we have just over a year of post short sell banned and under the new rules and regulations in that market. So happy to see that. Bonds, to our high yield bonds, still almost all remain in exclusives. There's no shortage of bidders who are willing to pay up to get access to it on an exclusive basis. But outside of that, we've got some upcoming as well. We've got some US equity auctions coming, which might be interesting. These days don't get outright bids, but we get structured bids inside of US equity exclusive. That's always interesting to see the brokers move kind of in packs. So when one of them starts to think they need to solve for name your acronym, the others are doing the same thing, and we see it in our auctions. So looking forward to that. It's been a really busy first 4 months of the year. A third of the year is gone already.
I know.
Crazy.
I don't know that I'm happy about it. I'm happy that we're getting into the season of the year that is my favorite, but outside of that, I could slow the clock down a little.
It'll be gone before you know it. Not to be too depressing, but summer comes really quick. Like I can't believe
it for a moment. I do have the spring season, Little League baseball, for anyone that maybe grew up playing is probably more than familiar, has started. And so therefore, one of my other volunteer jobs in my life has restarted, where I'm the assistant to the assistant to the assistant manager of the local snack shack.
It's an important role.
Assistant to the regional manager.
Assistant to the regional manager.
I was hoping you were the umpire.
I have been the mascot, and tonight's opening night, so the mascot's coming out. We'll have to see it.
Like a parade for opening night. It used to be a big parade through the nice.
Yeah, there's like, the local high school does its drum line, and
yeah,
it's exciting times. You get all those dollars out there, and they're super cute.
Did I hear you right? Is there a chance you're going to be the mascot tonight?
There's a reasonable chance that I get in that mascot costume tonight and do a little dance.
What is the mascot?
Good question.
It's a woodland creature. Help me.
A squirrel?
You have a squirrel out there?
Possum?
A possum?
Nope. Not a raccoon. Is it a raccoon? Maybe it's a raccoon.
Could be a raccoon. Could be a possum.
A raccoon is a woodland animal. So
I think it's a raccoon. Its name is Bandit. I have video, so if you ever want to evaluate, let me know.
So are you the Burlington Woodland Creatures, or is it like what is the mascot though? I've never seen so much confusion around this question.
It's only because it's the Burlington American Little League. So no, it's only because there was an animal that flew out of the tree onto the field one game, and so it became folklore, and that's hence.
So it's the Burlington Bandit is the short answer to Mark's
let's
question.
do the Burlington Bandit.
I gotta go too. See you guys.
All right. I've just doubled it.
Bye.
Bye,
Have
friends.
a good weekend.
Bye, listeners. Thanks all. Nope, and it's just me. This was real. Bye, everyone.
Thanks for listening. And now for our disclaimer.
This material is for your private information and does not constitute legal, tax, or investment advice. There is no representation or warranty as to the current accuracy of, nor liability for, decisions based on such information.